Topic 1. President Trump's China trip. President Trump spent 2 days in Beijing meeting Xi Jinping, focusing on trade, energy, Taiwan, and Iran, and returned home claiming major agreements. He said China agreed to buy U.S. crude and to order about 200 Boeing jets and cited 400 to 450 GE engines. But Chinese officials did not officially confirm those specifics. On Taiwan, Xi warned it is a core issue. Trump declined to state whether he would commit to defend Taiwan and has not decided on large arms sales. He also said China would help restrain Iran's military support and that both sides agreed the Strait of Hormuz should be reopened. Beijing described a strategic stability framework and plans for trade and investment councils, but concrete tariff removals, delivery schedules, sanction waivers, and many implementation details remain unclear. Major U.S. companies accompanied the delegation. Markets reacted skeptically to vague claims, and observers note past announcements from similar visits often went unrealized, so symbolic progress may not translate to immediate practical outcomes. Topic 2. AI-led investment and market frenzy. Cerebras IPO became the year's biggest listing so far as shares opened around $350 from a $185 offer, jumping roughly 90% intraday and closing much higher, raising about $5.55 billion from 30 million shares and putting its market cap near $900 billion, $1.07 trillion, by some reports. The surge highlights intense investor demand for AI-related hardware and software names, with retail and institutional flows chasing new listings and AI beneficiaries. Cerebras positions itself against GPU incumbents with wafer-scale chips and partnerships, AWS, OpenAI, though analysts flag questions about long-term technology maturity and customer concentration. Goldman Sachs warns of an up-crash pattern in options and indices that historically can precede further gains but also sharp volatility, so the IPO is emblematic of strong momentum paired with elevated risk. Topic 3. Federal Reserve leadership change. Jerome Powell leaves after 8 years, credited with quick pandemic-era easing and later leading one of the steepest rate hike cycles since the 1980s to fight post-pandemic inflation, though he faced criticism for initially treating inflation as transitory. Powell defended Fed independence under political pressure and cultivated broad congressional ties. He steps down as Kevin Warsh is confirmed as the new chair. Warsh inherits a challenging start. Iran-induced energy shocks, sticky service sector inflation, and weakening consumer demand complicate policy choices amid political calls for early cuts. Markets and policy outlooks may pivot depending on how Warsh balances inflation risks, labor market conditions, and political expectations. Topic 4. Markets are jittery. Stronger than expected inflation data and a spike in Treasury yields rattled bonds, equities, and commodities, with CPI up about 3.8% year-over-year and PPI around 6.0%, indicating renewed price pressures and import prices also rising materially. U.S. Treasury yields surged across the curve, roughly 4.08% for 2-year, 4.57% for 10-year, and about 5.11% for 30-year, while global bond yields climbed and safe haven and commodity markets showed divergent moves. Rising yields pressured stocks and precious metals, gold down 2%, silver substantially weaker, while oil jumped, WTI near $104, Brent near $108, reinforcing concerns that energy-driven inflation could keep rates higher for longer. The market is repricing away from early rate cut hopes, factoring in potential additional tightening and rising fiscal interest costs, weighing on sentiment. Topic 5. Corporate cost cuts and job reductions. Starbucks is cutting roughly 300 U.S. support, corporate roles, and closing some regional support offices, while saying store-level baristas are unaffected. The company expects about $120 million in severance and $280 million in asset impairments as part of CEO Nicole's back to Starbucks simplification, while still investing in stores. Detroit's Big